Crypto markets struggle to keep up with stocks and gold after weaker US jobs data makes a September rate cut fully priced in. Crypto vol gets smashed lower as ranges narrow, but put skew persists as hedging becomes the dominant flow across options. Inflation data this week will be key in determining the next move as the Fed goes into blackout. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. I've got my man Dave from FRNT. How's it going, man?
Yeah, I'm good. Market's not, is it? Market's, sentiment is not.
Yeah, crypto's just kind of lost its footing a little bit. Like equities are ripping higher.
Yeah.
Gold is flying.
Gold is flying, yeah.
Yeah.
And again, I think we just, there's still obviously a lot of supply to digest up here. Like we had some pretty big moves.
It's not like we're crashing either.
No, not
we're
at
just
all.
not.
Yeah.
We're just not participating in the latest.
No, that's what it's been driving. Like, there's been so many top callers right out on Twitter and stuff. Like this past week, saying that's it. Like, runs over. But again, everything I look at on the macro and the direction that we're going, I'm like, no, I think we're just really kind of going to ramp up.
Speaking of the macro, so we got a pretty nasty jobs print again, right? Yep. And then we've got these BLS preliminary revisions or something, right, coming out today.
Yeah. So we'll find out what they are. I mean, it's one of the problems with data, right? Like it's subject to so many revisions, and it's weird with markets because once we kind of pass the initial data release, we kind of don't really think too much about it. And I sometimes feel the Fed are a bit like that as well. But like, look, clearly the jobs market is not as strong as the Fed thought it was. 22K print last week. I think the June number was revised down from plus 14K to minus 13, which you got to think if Jay Powell had that in hand, probably would have cut last month.
Right, but that's what the market seems. But that's why they've nailed on a cut for September.
Yeah,
right?
they've nailed a cut for September and even pricing 10% chance of a 50 bip cut. Which
do you think that's likely?
No, because I think it's one of those that if he goes 50, then it
panic stations.
Yeah, like he'd be better just to go 25 and then again tee up another 25 in October, which is probably what I think he'll do.
So a dovish cut, basically.
Yeah, and also we talk about this credibility thing. It looked pretty silly that he went from last time out saying, labour market still looks robust, growth.
Pushing back on like all the Trump rhetoric.
Yeah, exactly. And then to basically go, oh shit, Trump was right actually, which is effectively what he'd be doing. So maybe Trump was right. But I mean, I do think there's some things muddying the waters on the labour market, particularly with the in terms of Trump's policies towards immigration. So there was a huge flood of workers coming into the economy under Biden. So the labour force supply really sort of picked up. So there's an argument that those dynamics are also kind of have an impact, and there's an argument that in terms of like the equilibrium number of jobs you need to create, it's probably now a lot less because you've got less immigration and
also you've got AI, right?
Yeah, and you've got AI.
So companies need less workers because AI does a lot of the heavy lifting, right?
Yeah, and my thing. So we had this week print. Markets love a bear story, desperate to price in this recession fear again.
Yeah, but the sell-offs last 10 minutes.
They last 10 minutes because, rates and liquidity. We're a function of rates and liquidity, and that's what I always say. So I'm never too bothered by that. Unless we're in a more extreme scenario where you're pricing in a more extreme kind of recession, then that can have a longer lasting impact. The other thing, obviously, everyone worries about is stagflation and like this idea of slowing growth and higher inflation that stops the Fed from cutting. But my kind of thing that I've been quite persistent with is that the Fed have told us if the labour market deteriorates, we're going to cut. So inflation or sticky inflation's not going to prevent them. And what I thought was interesting, and I was trying to drown out a lot of noise last week, but like break-evens rolled over. So we started pricing, fully priced in, obviously September, started pricing the 50 bips. I think we got, 3 cuts priced in for this year now. Break even, so market measures of inflation over like 5 years, 10 years actually came lower. So market to me is not pricing in that stagflationary scenario, which I always say is like probably the worst sort of risk-based scenario. So I'm looking at that inflation break-evens rolling over. We sat here last week. My big concern last week was what global bond markets were doing,
long end,
led by Europe.
Yeah.
That kind of calmed
got
itself
smacked.
down.
That yield got smacked.
Yeah.
Which is a good thing.
Yeah. Almost makes you think, is there a sort of subtle hand at play on that? But I think obviously the soft data, and particularly the US, we've seen quite a reversal in yields, and actually 10-year yields are breaking down again. I think we're at the lowest level since April, and 10-year approaching that 4% level.
Yeah.
I think we break that, and then you're looking at like 380, sort of 350 on the 10-year.
And so, equities and crypto will probably cheer that, right?
Yeah, and certainly like the kind of long duration proxies, which is NASDAQ and obviously Bitcoin and crypto are the longest duration assets, should be cheering it. So
gold, but why is gold rallying so much? Why is gold leaving everything in the dust?
Yeah, I think there's a few things. I think I do think we spoke about, in terms of big picture stuff, I do think these debt dynamics are a concern to everyone. I do think there's concerns around Fed independence and the credibility around that. I think there's people concerned about the dollar debasing. So I think there is certainly with central banks like a move out of dollar-based instruments and into gold.
China apparently is still adding loads of gold.
Yeah, and I've said before, this is why I'm so bullish on Bitcoin still. We're in like this, the currency debasement games are real. We've seen like Besant, kind of really extend the Yellen playbook of this, what I call Treasury QE, where they've they're front loading, or they're making sure the issuance of the debt is at the front end, which is easier to fund, and they're essentially doing a form of yield curve control. So I think you've got all these things. Liquidity is pumping. We've got global rate cutting cycle still well underway. So I would expect gold to be going higher. I say I think gold, a bit like Bitcoin, I think gold's more of a currency debasement hedge than it is an inflation hedge per se.
Yeah, agreed.
And also just pricing in this easier rate environment that we're going into. So gold makes sense. I just think Bitcoin needs to play catch up. I think it's just digesting a lot of supply.
Yeah, at some point it's got like a 15,000 point rally in it, basically, right?
Yeah, I think like it'll be, some of the whales stop selling once that pressure
and just
alleviates.
Be at 30k in a week.
And everyone goes, oh my God, everyone got bearish. What's happened? So I think it's good. Like, again, pure big picture macro stuff. Dollar's breaking down again, which at one point throughout August looked like it was starting to rally. That's now back on in the downtrend. US yields are breaking down. Look at like credit spreads at some of their lowest like levels, like historically. Like there's no signs of stress like in markets. So for all this bearishness, this is top cycles stuff.
People love to just. Yeah, the market climbs a wall of worry, doesn't it? Yeah, break
evens are rolling over, so we're not seeing these accelerated inflation fears, which would be more bearish.
Speaking of inflation data this week, are we concerned or not?
No, I don't think it's the thing right now.
It's just not the thing that's moving the dial for the Fed anymore, is it?
They're kind of
they're looking through all the inflation prints and saying, no, the labour market is what we're focused on right now.
Yeah, and something we spoke about, I think implicitly the Fed, Bank of England and others are accepting a higher rate of inflation. They'll never tell you that.
They just can't admit it.
Yeah. So what, a 0.1 stronger or weaker for the Fed's not going to do anything tomorrow.
I hear that.
So right now the concern is the labour market. That's where the risks are. They're cutting in September. They're probably going to go in October as well. I don't think that's a big thing. Again, I think there's an asymmetry. I think if we get a slightly weaker print, then the market will take that quite positively. But it's not going to stop the Fed. Oil's coming lower again. We've not really spoke too much about that, but OPEC Plus are talking about increasing and ramping production more. You've still got a kind of soft global economy at the moment, so oil coming lower, which is again like stimulative and good for liquidity.
Volatility, cross asset volatility is coming down. There was a little pop in rates vol. It got hit after non-farms. Equity vol, VIX is heading lower. It's at about 15, but could arguably go to 12, 13 over the course of the rest of the month, maybe. Like there's a lot of supply of equity vol out there, and Bitcoin vol is in the low to mid 30s, which is very low.
But so the only thing for me right now that it is if the labour market is sort of portending a deeper slowdown and recession, then that's probably going to hit risk. And again, I think short-lived, because then you just see a massive move in rates and surprising
which will
deeper
cushion
rate
that
cuts.
blow.
Yeah. And then reflexively we trade higher. Also, as well, if it's particularly US centric, that we start to price a relatively weaker US and the dollar comes lower, which it feels like it is, that again is quite stimulative for global financial conditions. So I struggle to see why everyone's so bearish. And in fact, the way we're kind of playing out right now, I think we're digesting this supply. I know everyone thinks it's buy the room, sell the news thing into the Fed. I don't think it will be. Look, we cut 50 basis points last year and then we ripped, right? And I know obviously we had the election.
But the point you made earlier about it being a dovish 25 bip cut, I think that's the most bullish scenario, right?
Yeah.
Because it's kind of like, we've delivered the cut that we said we would. And that's stimulative.
Yeah.
And guess what? Another one's probably coming.
Yeah.
Right. So whereas, but we don't need to panic. Whereas if we don't go straight with 50, it's like, oh my God, how bad is everything?
Yeah. The other thing I think is interesting is obviously like ETH's had a really good run like over the last couple of months.
That's stalled now though, right?
Yeah,
What's going on there?
just it made record. Again, classic price action for me looks brilliant. By the way, this is why I don't know what the world of X and crypto Twitter is stressing around.
But we're not above 5,000 yet.
Yeah, we're not above 5,000, but we made these record highs. Profit taking, corrections.
The speed at which we got back to the highs in ETH was just unbelievable.
It was really quick. So this feels like a very, not just normal pullback, but a very much needed pullback consolidation period.
It's not going, but I mean, I'm waiting to buy it below 4,000. I'm not getting filled.
Yeah, you're not getting filled.
Right.
But if you think of the drivers that we've had for ETH, and again, it's funny because I obviously try and look at this big picture stuff. Markets like, well, if it's not reacting straight away, then something's wrong. Or you're wrong, and eventually it plays out right throughout the weeks and the months ahead. Which is why I think I think Bitcoin's going to like 150k over the next few months, and then ETH above 5k. But if you think of the ETH drivers that we had, obviously the Genius Act and what that means for stable coins. We've now got our Michael Saylor in Tom Lee and Fundstrat and all the Bitcoin treasuries.
Apparently he's on holiday though.
Is that okay?
I think he's gone to token.
Oh, there you go.
So he's not banging the drum for ETH right now.
But he'll be banging that pretty hard in token, I'm sure.
Maybe at the end, that's true. At token, and when he comes back, true.
But so obviously the digital asset treasuries are now sort of buying ETH. You've had that story. You're seeing the traditional financial system looking to build on Ethereum rails and with like the tokenization of stocks and all these things all happening on Ethereum. The thing we haven't had, and which I think is really important for Ethereum, is US rates have been on hold for 9 months. US rates now we're pricing a pickup in that cutting cycle. That's going to be good for DeFi and the search for yield within DeFi. So you expect DeFi activity to come up. So I think we've now got another sort of positive factor that's going to benefit ETH. So I think ETH looks like it's consolidating just beautifully here and ready for its next leg higher. And then I think as ETH goes, then it's going to lead the altcoin space. Obviously Solana's having a really good pump right now because again, we're going to see Solana treasuries and the ETFs as well. So I think everything looks really good. Don't get what anyone's looking at to sort of worry about. Again, the only things that I two risk factors for me. If we do see a deeper, slowdown, not seeing that at the moment. ISM services printed 52 up from 50.1. So services, in fact, soft data suggests the US is starting to bottom out and turn a bit higher. The other thing, and we're not there yet, but the RRP, the reverse repo facility, that's kind of has been funding a lot of this treasury bill issuance. That's now down to its last 20 billion. Once that taps out, then you will have excess bank reserves that start to come in and fund that. So liquidity, there'll still be sufficient liquidity to keep funding that. Okay. The worry is if that starts to then dry up and then we get a funding kind of, repo type crisis that we had back in 2019, then you will have a market wobble and puke out and everyone panics because front end rates will be spiking. Market sort of panics out of everything until the Fed then ultimately come in and become the liquidity provider of last resort. And if I was to think of a path of how this could play out, I could see a really decent rally into like November, a bit of a funding kind of issue that then like, you know, Bitcoin, crypto corrects 20-30%, stocks correct 10%, call it. Then the Fed liquidity comes in, and then we have another massive move like into year end and maybe into early next year. But again, too early to start calling that. But that's the risk on the horizon. But right here, right now, I think Fed are cutting next week. Everyone else is cutting still. Liquidity is ample and still rising. Dollar's breaking down. Yields are breaking down. Oil's coming lower. These are huge tailwinds for risk and for Bitcoin. And I think once we've digested that supply, Bitcoin's ready to sort of make its next leg higher.
All right, mate. There we go. Nice summary. So this week, I managed to catch up with Mark Hiriart, who's head of sales over there at ZeroCap, based in Australia. Have a look at what he had to say. Hey everyone, it's Imran, and today's special guest is Mark Hiriart, head of sales at ZeroCap. Welcome, Mark. How you doing?
Good, mate. How you going?
I'm good. So before we jump in, you are also an ex-TradFi guy like myself. So why don't you give us a quick rundown on your background, what you used to get up to, and how you got into crypto?
Yeah, sure. Thanks for having me, mate, by the way. Pleasure to be here. Yeah, it's been a bit of a tumultuous journey to get here, but I feel like it's finally working. But I was nearly 20 years in equity derivatives.
Oh, wow.
Hong Kong, London, and Sydney at JP Morgan, Morgan Stanley. So I did a few good stints there, and I was lucky enough to work across lots of different desks over there. So I was on the structuring desk. I was on the exotics trading desk. I ran derivative sales for Morgan Stanley. I ran a Volbook at JP Morgan. So across that whole equity derivative piece, I managed to pretty much do all the roles there.
Wow.
Which is quite lucky, and I get to see, I kind of understand the front to back of like the trade and stuff, which sounds a bit boring, but it's super helpful when, you know, as you piece all this stuff together, especially in crypto when you
Hang on. So were you a salesperson that could actually empathize with a trader? Yeah. I was not sure I met one of those.
I mean, I always wanted to be a trader, like, and that was the pinnacle for me in going through the ranks. So I started off in sales and then moved to exotics, like pricing and execution and structuring, and I still wasn't quite at the trading, but I managed to get on a desk. So I sort of ended up running like a dispersion book in Australia and Sydney. But then I took a break, started my own business, and didn't really work out. But then when I came back to Morgan Stanley as a salesperson, I was kind of the trader that could talk to people, and it is amazing, really. So I got a lot of success there, and now I sort of found that I like lunches and hanging out with people. I do trading at night or watching the e-minis. So now I'm fully fledged salesperson. But yeah, luckily I've got a bit of a technical background, so I can sort of talk my way out of trouble if I need to.
Nice. And then what about the move to crypto? What inspired that?
So I've been in crypto a long time, on and off. So not to name brag or name drop or, you know, but I used to, back in the days in Hong Kong, a lot of the guys that kind of OGs now were kind of doing the rounds in Hong Kong. So this was like 2010-ish. So, I worked for OSL before I joined ZeroCap, but I was around when like ANX were first spun up, and they were doing like, it was on the early crypto exchanges. Arthur Hayes used to be a pretty good mate of mine. Arthur, when I was running my coffee trading business, Arthur was sitting next to me in a co-work space thinking about BitMEX. And, I wasn't really paying much attention to Bitcoin at the time, but claim to fame, he taught me how, so this was 2011, taught me how to market make on localbitcoins.com. So I'd sell like Bitcoins to people at the MTR station and hedge on Bitfinex and all that stuff for like Bitstamp plus or minus 5% spread. And I had had quite a few Bitcoins back then. Obviously didn't keep them because I wouldn't be here still working. So I've been looking around all that for a long time, kind of fell out of it. When Ethereum was getting popular, wasn't much really interested. I was kind of concentrating on my career and stuff. But then DeFi summer, I think is when the spark got really lit. And then sort of 21, 22, I was just trading so much when I had, it's good I don't work anymore, but I had such a lot of PA on. And I was really fascinated with the whole, DeFi and farming and LPing and it's all this stuff. So yeah, I was really into it, and I was kind of stagnating, I think, a little bit. What do I do next? And then obviously COVID hit, and that gave me a good excuse to come to Australia and try something new. And I, ended up joining OSL. I sort of set up their Aussie business and end up doing some SaaS stuff there. But yeah, that was my thing. I wanted to get into institutional crypto, and I thought like being a vol guy, that was like how I'm going to sort of make my mark in the future. Not quite happened on the vol space yet, because I think it's still coming. It's still pretty embryonic, but definitely happy I made the jump over to crypto from TradFi.
Cool. And so then tell us a little bit about ZeroCap then. So what are you guys doing there? What exactly for your clients?
Yeah, so ZeroCap used to be a client of mine when I was at OSL, and then we sort of figured out for me to come over, and I've been helping them build an institutional business. So these guys they've been around a while as well. So they've been around since 2017. They started the business. The three founders, Trent, Ryan, and John, and funny enough, they all met each other parachuting, like jumping out of a plane, basically.
Oh wow!
And fell in love, became mates over the love of crypto and Bitcoin. And they were like the first guys in Australia, basically, to set up like a platform that allowed institutional kind of access back then. So it was really targeted at like the high net worth market. And so they would give custody and market access to people. And let's say you had a couple $100,000 or $1 million to put into crypto. Back then in Australia, there weren't many options. So these guys set this platform up, and then they've still got a lot of traction with the family office space. So one of the biggest family offices in Australia, the Victor Morgan Group, actually ended up buying some Bitcoin with us, and liked the service, told their peers, and ended up coming on the cap table. And then these guys kind of carried on doing that. They sort of built a structured products desk quite early on down here, I think 2019, 2020 kind of time. And then basically that was going really well. But then I think we had, the COVID, we had the market crash. Things were like, not great across the board. And they were kind of thinking what to do next. And obviously I popped up and was like, I think we can help together build this institutional business. So we kind of moved away from a wealth platform as such. Now we've become like an LP to the market in Australia and the regions, so Asia. So we do a lot of spot liquidity, OTC, and we also do a lot of derivatives, OTC, and we also have a structured products program. So we're kind of like a regulated platform here in Australia. We do have some like legacy, like high net worth and family offices, but we're really targeting like the institutional B2B part. And so we've now got clients in like 50 countries. We're about to go 24/7 on our trading desk and offering. So we're kind of the young Aussie upstart that's kind of punching above its weight and trying to come after some of the big boys who we all like and get along with as well. But so it's been a bit of a wild ride, but yeah, we've had phenomenal growth for the last year or two, and really sort of riding this institutional adoption and sort of become the go-to desk now in Australia.
Nice. And you mentioned OTC derivatives. So like, for example, obviously me and like a lot of the retail people will be on Deribit, basically trading options on crypto, right? But obviously instos are able to trade OTC direct with liquidity providers like yourself. So I just want to get a gauge, like how big is the OTC market for options on crypto relative to what we see print on Deribit? Because like last checked, Deribit had like a $30 billion week in notional volume on Bitcoin options. ETH probably got up to about 10 billion, but normally Bitcoin's trading in that 20 billion range. ETH maybe trading in that 5 billion range on a weekly volume basis. How much more action is there out in the OTC world that people don't see or know about?
It's a good question. It's kind of those like ones that's a bit hard to quantify, but I'll give you a couple of data points. Ultimately, I think most people's hedges land on Deribit, like regardless. So regardless if you're making an altcoin market or a Bitcoin, whatever it is, I reckon 99% of the stuff just ends up clearing on the screen in Deribit, whether it's one paradigm or going into the screen direct, etc. So I think, you can't underestimate how much is going on there, especially for Bitcoin and ETH. Like, it's just so easy. The reason why some stuff trades OTC and maybe not on Deribit is regulatory sometimes. So up until recently, a lot of the US guys there wasn't this guidance that seemed to be coming out now. Some US guys who obviously are venture funds, etc., or crypto funds, they couldn't be, and they might not have had a BVI or a Cayman or even if they did from a compliance, they might not have wanted to touch Deribit. So a lot of those guys were just doing back-to-backs with the likes of probably like Galaxy or, etc. Or us. So that was still obviously clearing on Deribit, but they were kind of, facing off some of these LPs in the market. So that's definitely a big component up until recently. I'm not completely up to like where we are, up till as of last night on crypto derivatives in the US. It definitely feels like it's opening up, but I think a lot of people are still a bit hesitant to just trade on screen, with Deribit. I think as Deribit becomes more licensed and goes in, there's the UAE stuff and, that licensing framework comes out, I think you'll start seeing some of these guys will just trade directly on screen. And then you've got like some, like Goldman's. So Goldman's are doing crypto options, to their institutional clients. Again, you've got to think that they're probably, I'm guessing, clipping a ticket for seeing it in the middle for people who can't clear on Deribit. So if you're, I don't know, pick big Connecticut hedge fund, you can't for many reasons. Probably the most is just there's no framework yet to trade directly on screen. So a lot of these guys, I think, are trading with Goldman's, and they held a really good event this year in London, and they said they were having really good year on this stuff. So obviously that's happening, and then you've got stuff like the altcoin market. So there's a ton of people out there with altcoins or shitcoins, venture funds, liquid hedge funds, all sorts of different people. And a lot of these guys are usually selling vol, so usually selling calls, I would say. And then so guys like us and other guys in the market are buying this stuff. You warehouse a bit of it, but ultimately you need to get a bit of a hedge off. And so you're probably going into the screen and covering like short dated SOL, or you're probably trying to buy some ETH Vol against it. And obviously the way you price it is then gives you a bit of buffer to hold on. So I would say, so I would say Bitcoin and the big stuff is all ending up on the screen eventually. I don't think many people are sitting on, warehouse positions. There will obviously be some, but I think ultimately a lot of the hedges will hit the screen. On the altcoin side, there's a lot of stuff going on. Then it's dependent on the balance sheet or the risk tolerance or the VAR or these desks that they can run, how much they're going to run and how much they're going to, try and hedge out. So I would say the altcoin vol market is got, especially this little last 6 months, has really got big on the option side. We've seen a ton of stuff going on.
Is everyone buying Solana calls?
Yeah, it's actually funny you say that. There was a big trade. A lot of people were doing like a big trade in the market. People were doing things like selling Bitcoin calls and buying like Solana call spreads.
Yeah, it kind of makes sense.
But, Solana being a bit more of a racier quote unquote coin, the upside skew is kind of going to, even though it's opaque, is still good. People are still going to price it very rich. So call spread is a good way to kind of like get good bang for your buck.
Plus the Sol vol, like at the money vols at what, 100 or 90 or something, right? So you're buying a load of Vega at 90 versus just selling it on Bitcoin at 30, 40.
Yeah, or wherever it was. Yeah, probably about at the time. But yeah, exactly. And so those kind of trades are big. We had a load of call spread buying on Solana. A ton of that. And even like riskies, we've seen like earlier on the year when Solana was on that like.
So what sort of strikes are people targeting on the upside? Like how far do they see Solana going? And what kind of duration are we talking? Are they super short dated thing? Because the one thing that annoys me about Solana options is like the liquidity is not doesn't have much duration on it, right? So yeah, I buy a 1 month call, but I can't buy a 6 month call. Like
yeah, you could buy a 6 month call out of the OTC markets. That's the good thing about the OTC. I would say
I don't think I'll get an ISDA, mate, personally. So I think I might struggle with it.
Usually not with a long form or something, But the funny thing is, and it's really weird. Even on Bitcoin, you can't get a forward price out beyond a year. You just can't get a Bitcoin. You can't get like a 2 year Bitcoin forward, like in the interdealer market. Like you can't. Yeah, so pricing even Bitcoin on an 18 month or 2 year, like some guys do it, but it's a bit tricky. And then so to your point on Solana, most people are playing in that sort of 6 month space. Some desks will quote out to 6 months, but it's like, where's the forward? Like no one's got a clue, Yeah. My analogy is like pricing an unlisted like Taiwanese noodle shop that's,
Does that mean it's easier to trade a delta neutral straddle than it is to trade like a call option then? If the forward is a thing that people are worried about?
Maybe, yeah, because there is no divvy. So you're not going to get, if you're doing the strads, you're not going to get like screwed on one side, you know, if the divvies come in and or out or surprise, you know, or special already. So you're not it's just, yeah, it's a bit tricky. So a lot of it is a bit of finger in the air and good old like, well, are we happy to buy it here? Or even if you're, you know, selling premium, well, what's the chances of us blowing this up and keeping the, you know, or versus keeping this premium? So it's a bit more old school. I think the way that people sort of risk, price the stuff and think about risk, as opposed to a bank, you going, oh, my local vol model has done this, or this or that, and my super wingy stuff is, you know, 0.2 of a Vega off. Like in our space, it's a bit like the Wild West still. It's probably only affects 90s.
That's what it's interesting though, isn't it?
Oh, 100%. 100%. Yeah. So to your question, I think there's a lot of stuff that's definitely picked up. I think there's a lot of forward stuff trades as well. I know it's not technically evolved, but like a lot of venture funds have all these like, you know, these vested or unlocked positions so they're going to roll out. Yeah. So a lot will trade like forwards to try and match those unlocks, and that's a big thing that's happening as well. So that obviously went clear on Deribit. So I think short answer, most stuff does end up on Deribit, but there's a lot of stuff growing on the sides or the periphery that's sort of gaining traction that probably doesn't now, and they're pretty increased.
Okay. Yeah, I guess with the opening up to the US market as well, I mean, all kinds of stuff can happen. What about, so obviously institutional adoption, particularly in Deribit, has been huge. We've now started to see banks embracing crypto and ETH being the main blockchain. So like, you know, stable coin rails, ETH's exploded on the back of all that optimism around kind of the kind of tokenization of real world assets and all these things. But in terms of the use of options by instos, is it still primarily yield enhancement that you see, or are they actually hedging? Because like I'm always going on about hedging and it drives Dave crazy, right? And it's like, no one wants to hedge, mate. We're early in the crypto cycle. It's going to the moon. We just want yield on top of our crypto. We don't need to worry about the downside, because every time it goes down, as long as you hold it for long enough, it's going to go back up again. So it's like the gravity to the upside. So what do you think? Are we starting to see more institutional hedging flow come through, or not really?
No, I think so. I remember reading an article, I think it might have been Arthur Hayes put something out, like, you know, in the Substack like 3 or 4 years ago, and it was like, crypto doesn't need options or something like, you know, because we have perps and it's different. There was definitely an article, I need to dig it out. But yeah, to your point, everyone was trading on leverage. You know, it goes down, it goes back up. You know, I think options I always felt crypto was a complex thing, and adding derivatives on top of it just made this complex thing more complex. So people it was just too hard for everyone. I think now with like the BlackRock sort of sanitizing IBIT or sanitizing quite a bit. I think they've kind of sanitized it for like boomer portfolios. And so they've kind of, it's been good, but good and bad. And I can explain why I think so, but they kind of sanitized it. And so you get a lot more like institutional, traditional capital coming into this stuff. And these guys will be like, I've got this position, whatever it is, and I'm probably going to need to hedge some of it. Like, and that's just prudent risk management, like any sort of like fiduciary would do. So I definitely think that's coming. However, most of the products I think you will start to see out in private wealth desks are going to be yield related. And like, you know, like a lot, especially in Asia, like they want the high vol assets, they want to get these coupons and then, you know, roll the dice again. So I definitely think that's starting to come, and I'm hearing, you know, not yield, but like, you know, accumulators, decumulators, that sort of market's very picking up as well in Hong Kong. So like, you know, a lot of these guys, they just want to punt, get some delta on quick, you know, knock out, roll it, go again. And these sort of short duration, sort of like these sort of like trades. So I think there's a bit of that. But back to your question, yeah, there is definitely more hedging, especially as the stakes get higher. You know, you see, you know, just looking at where Bitcoin is now and all that, the big guys coming in, the numbers start getting a lot bigger. And so options become attractive. And I think previously, I know not so much the last couple of weeks, but usually calls were bid over at puts. So like the like collaring and all this was super attractive. And I think now such
just
a way.
shifted actually. So I was checking it this morning. The entire Bitcoin curve out to June 26 has just shifted down into put premium. So I've been talking about this over the last couple of months, saying, is that because of institutional hedging pulling it lower, or should we think of it as something more sinister, like the bull market's done, basically, right? Because some people were like, whenever we got a wobble in the market, the front end skew would always get pulled down to puts, but the long end would just stay in call all the time, right? So I was almost like, well, the long end calls are telling us we're in a bullish regime and to be bought. But when the long end comes into puts, is that a get out of the way type signal? Because actually now even the long end doesn't believe in this move anymore. So I don't know whether it's that or whether it's being pulled down by the hedging flow that needs a hedge that has a longer duration rather than just the next month or two. They're like happy to collar their stuff and do it in a year maturity kind of thing.
I think there's probably some truth to that. And I think there was I don't have the data to hand, but I think a couple of weeks ago there was a massive block on a Deribit or Paradigm. It was like put buying, and it was like the biggest one. If it was the biggest notional, I think I saw Deribit tweet it out. It was like $250 million put buying or something like that. I think it was.
What duration was it?
I can't remember the tenor, but it was obviously the screen doesn't go up that, but it was maybe a couple of months or something. But I do think. So I think a couple of things are at play. That for sure. So I definitely think, given the sums of money involved now and the kind of, like I say, boomer capital coming into the markets, there's going to be a lot more put buying. And I think as well, there's a lot of people with IBIT positions. So there's a ton of people holding IBIT who traditionally wouldn't have held it. And they're going to be like, oh, what's my options hedge? And all the liquidity is on Deribit, right? So I think, and all flows onto Deribit. So I personally believe so. There's probably.
You think IBIT hedges that are done OTC and stuff are getting then transferred over to hedges flow on Deribit?
100%. And then also, there's a lot more sophisticated, like VOAB guys, like looking at crypto now. Like I know a couple anecdotally. I reckon those guys will be looking at that sort of inverted skew trade and be like, what? I'm going to sell the shit out of those upside all day long, you know what I mean? And buy some and run a long delta against it or things like that. So I think there's probably a bit of that. There might be some sinister stuff going on as well. As in some people just turning outright bearish. But I guess viewing how the alts skew trades relative to that Bitcoin is probably going to be an indicator of like whether that's the case or not. It might, if alts stay in inverted skew like ETH and Sol, etc., and Bitcoin does that, it's probably probably explains most of it away that it is this institutional flow.
Okay, so you're saying if we were seeing a move into put skew in the long end on alts as well, we'd be more worried about the general crypto bull market being done. But because we're not seeing that and it's more Bitcoin specific, it's more likely to be the impact of hedging in Bitcoin because that's kind of a matured asset that's had a load of adoption by these real money boomer type people, whereas alts just haven't had that flow yet, basically, right?
I've had that flow. And there's like there's so much IBIT in people's portfolios, like let's say anecdotally hearing about different friends on different desks around the world and at banks, and the ones that can do IBIT are trading quite a bit. And then I'm sure, and this is something I'm personally want to start doing more at ZeroCap is like Lombard loans or collar financing against IBIT positions, right? So you can get some leverage against it, some utility, some cash or whatever it is. And then obviously those like collar financing, you're going to be, clients buying puts, selling calls. I think just like the market dynamics of Bitcoin now or the market structure, especially with the derivative side, is getting a lot more sophisticated. And to us, it's not sophisticated, it's just bread and butter, right? You've got, there's index arb, that's why the basis has come in so much. And then you've got like a borrow market opportunity coming out on this stuff. And then you've got, people trading with RV vol, and you've got stat arb guys. So you've got all these different parts of the market now that are trading Bitcoin that isn't just like hodlers or maximalists or, your crypto cohort. It's like the TradFi part is coming now. And that's where I think start seeing like the parameters normalizing and looking and smelling a bit more like traditional markets. And then You've got then Solana or ETH somewhere probably in the middle because you've got the treasury flow. You have got the banks building on the rails, but I don't think is nowhere near as prevalent as like the Bitcoin like holdings. But then that's kind of could go there. And then obviously Solana's, we're talking about DATs on Sol is the next thing, but there's nothing else really going on. There's not really any ETFs I can think of that are significant. So I think it's just the maturing. And then you start seeing these parameters normalize, and especially get the hedge fund guys coming in and they say, oh, that looks out of whack. I'll sell that. I'll buy that. And if everyone starts looking at the same thing, that's why I think the basis is just can't, it's stuck in a rut. It can't get out of that sort of 6-7% sort of rut for no reason because everyone's just hammering it as soon as it pops.
Yeah, because it's worked so well. All right, last question for you then before we go. What do you think about this decoupling between Bitcoin Vol and ETH Vol, right? I mean, it's like, it hit as high as like 35 in the front end, has come in a little bit this week, but still, it's been persistent as hell. I mean, this is historically high levels for ETH Vol relative to Bitcoin. I was expecting to be in reversion a while ago. We have not seen it. What do you reckon?
I gun to my head, I reckon there is going to be some mean reversion. The reason why is we've been seeing some of these DAT flows. So DATs are the new acronym for digital asset treasury. So it's the new, the DAT flow. Anyway, we've seen some of the DAT flow coming out of the US and it's bloody huge, man. It's way huge.
In ETH, you mean?
Yeah.
Yeah. And that's what moved it so dramatically, right?
Exactly. And it's like, there was the catch-up play, the ETH spread trade, the Tom Lee stuff and all this stuff on Twitter. And it was like the darling for the last like 6 weeks, whatever it's been. And so that ETH is really going on a tear. I'm not a big ETH guy. Never, I don't know. I'm not convinced. And obviously tactically it's been a great trade. I just think some of this stuff slows down personally. And I think you're going to start seeing, if this starts slowing down, you might see some of these guys, the fast money exiting the positions. You might get a bit of volatility still in the short term, but over the long term, once the fast money's tumbled out of this trade, I think it just kind of like meanders and sort of starts grinding. So I think Vol has to come in. I think it's having its like this time the limelight, all the interest.
I'm just concerned that if the treasuries do raise a load more money and they're not done because you look at like the treasury, the DATs in Bitcoin and how much they've grown to, right? 100 billion or whatever. I know a lot of that being Michael Saylor. But if these ETH DATs, have they accumulated more than 10 billion yet? I'm not sure how much it is. I think it's in that ballpark, right?
Yes.
But like, if they keep coming, ETH just doesn't have the depth of liquidity on the offer, right? I mean, we take it to 6,000 in a heartbeat.
Yeah, I know what you mean. I think what you'll start to see is, and I've heard whispers of this in Australia, and I'm starting to hear, obviously there's like 90 like trying to list in the US, but like a lot of the global exchanges, I think they're going to start clamping down on these treasury like spin outs. So like, they're like reverse takeovers or shell listings and all this stuff. I reckon you're going to see a massive clamping down of this stuff, and it maybe a bit of discouragement. So like and who's to say if it impacts, it's definitely going to impact the small cap names. So you try and do a hyper liquid DAT, I don't think it's going to fly anymore. I think Ethereum's probably just got in by the skin of his teeth to be considered in that same bracket as Bitcoin. So it might still be valid a trade, but I do think the bar to float these vehicles raise is going to become a lot more difficult globally. And we're starting to see that a few of our guys have tried to raise. It's kind of been like thrown out the door and they're not going to go ahead with it. So the question becomes like,
that's really interesting.
Yeah. So does ETH manage to hang on in there and get these become like the MicroStrategy thing like play out, or does it kind of like peter out a little bit and everyone's like, all right, lads, the game's up. This has been a great trade, but like enough. I think maybe that will start happening because it's gone a little bit silly.
It was pretty nuts how quickly that thing rallied. I have to agree, but you never know. Crypto is a funny old game.
It's a funny old game, man. Like, yeah, what's the pain trade on that one? Is probably like, yeah, ETH looks elevated, everyone's selling, and it just keeps grinding higher, and just like it could be the Widowmaker, right?
Yeah, I don't know. I think the pain trade is probably a shakeout first, maybe, and then a massive rip, probably, right? Because I think everyone, the way it's trading, it's like everyone's like, yeah, it's going to the moon. A little shakeout first, down to 3,500, get rid of everyone, and then 1,000. Yeah, I think that's the real fake trade.
Are you on BA ETH? Are you got a position? Or?
I've been long Bitcoin, ETH, and Solana for years, but I never really hedge my Solana because I don't think it's matured enough yet. But like I sporadically kind of hedge my Bitcoin and my ETH stacks in various ways, whether it's with futures or risk reversals or whatever it is, right? So probably running about 50% long ETH right now, and about 60-70% long Bitcoin right now at these levels.
I'm like 80 Bitcoin, 20 Sol, and just got no ETH.
And I've got all my Sol unhedged. Yeah. So yeah.
Yeah, I'm talking. I don't know, because I don't know a lot of the banks are building on it, but like it's a bit. I personally think it's a bit slow, and I feel like it's had its time. And I don't know. There's so many new incumbents, like whether it's Sol or even XRP. I think it's an incredible challenger to sort of like getting in some of these instos. But we'll wait and see. But I going to my head that spread's got to normalize in some capacity.
Yeah. All right, mate. It's been a pleasure having you on the show. Thanks for coming on.
Thanks so much. See you later.
See you soon. Take care.
Bye.
So there you go. I think my biggest takeaway from that conversation was how, I've been trying to think about whether this long dated skew in Bitcoin moving into puts is a danger signal, right?
Yeah.
Is it like, oh shit, this is like a regime change and the bull market's kind of done, right?
Yeah.
And that's what I was racking my brains trying to decide. But he's kind of helped me there. And he said, well, there is a ton of hedging now coming through from these real money types who have allocated billions into crypto in IBIT and whatever else.
Yeah.
That is, a lot of these guys don't want to hedge using 1 month options. They want 1 year hedges on, right? They want risk reversals, whatever it is. That is going to pressure the skew. And if it was a regime indicator and it was going to actually turn into a bear market in crypto, you'd be seeing similar sort of things happening in alt vol, which you're not seeing in the likes of ETH or Solana or whatever. They're all still quite bid for the upside from what they're seeing. So that's kind of put my mind at rest a little bit, I think.
Yeah, nice. Yeah. And I think like these things are important to understand, because we're so used to like looking at different relationships and what they mean, but you have to contextualize it and think about what the drivers are. I think that you mentioned gold earlier, like with gold, I think people are looking at gold and saying gold is telling us something bad's about to happen. But actually maybe it's not. Maybe it's just telling us we're going into an easy rate and liquidity environment, and that's why gold's pumping. So yeah, I thought that was interesting. And yeah, it's a really good point around the alt space in terms of that's not confirming like a particularly dovish shift in the market. So it looks
more like a rotation out of Bitcoin into the higher risk stuff within crypto, which actually is a really bullish sign.
Yeah, let's bring on alt season.
Bring it on. All right, we'll call it a day for this week. Remember, like and subscribe, and we'll catch you guys back here next week. Cheers.